OFX was popping. So I know I go back and forth on risk rewards, what I think is better, one to ones, higher risk rewards. Um, some trades happened this week that made me start to think maybe I should go back. I'm not changing the strategy at all. But change the risk rewards. I don't know. It might be for the better. So, like I've said before in the past, I think one on ones, it takes you out of a risk reward mindset where you're not trying to force something that a lot of times, not a lot of times, but sometimes is not going to be there. So trying to make stop losses smaller than they should be or TPs farther than they should be just to hit a certain risk reward when it's not really safe to do that. It's also very simplistic, reasonable TPs and stop losses, meaning that TPs, the way I trade, are taken to the next level of support or resistance. So that's reasonable, and that's a realistic TP to have. Stop loss below the low or above the high, whether you're buying or selling, and that's also a safe stop loss, a safe, reasonable stop loss to have. And it's way less likely to get wicked out. The drawbacks of it, because you have to have an edge. You have to have something that puts you to make just a little bit more money than you do on the winners and you lose on the losers. And that's why risk reward is a thing. So with that, you have to manually close the trades when it starts to go against you. So when I'm talking like, let's go over here. What I'm talking is this. I'm saying if price is completely going a certain direction, just like I trade, and the price does this and it has a certain level of resistance, and then bang, now it's coming back to a level of support that I want to buy on. This is exactly how I trade. Then what I'm going to do is I am going to have buys. Okay? I'm going to have buys, and I'm going to take my buys to the next level up here, and then I'm just going to match that. I'm just going to match that with a stop loss. Okay? So I'm going to have a one-to-one. My stop loss is going to be at the low, which is very safe. Entry right on top of the level. And then the TP is going to be the next level. And that makes sense. And that's a reasonable, realistic trade. Versus you have a 1-2 or a 1-3 or something along the lines of that, where price isn't able to play around as much with this level. So trying to have a 1-2 or 1-2.5. Nothing's telling you that price is going to come down to this level and just bounce and go. That's not, it happens, but it not majority of the time close these out, close the one on ones out early. Because if you think about it, you're risking, let's say 5% to make 5%. This is 5% to make 10%. But on these, you close that out at 2.5% loss. Okay? So that in the long run, you're going to be basically taking a 1-2 the same way as you're taking a 1-2 on this. Right? Or let's say you're risking 5 to make 5, 2.5 to make 5. In the long run, it's going to be basically the same thing. The thing is that you have to manually close trades, and I know a lot of people do this. High traders, QBanks, Anthony's World, they do stuff like this. So is what it is. But the benefits with the higher risk reward is that there's an automatic higher return. So if it does tap and go, boom, you made double what you were risking already. The drawbacks are the risk reward mindset, which again I think is the biggest benefit of a one-to-one, is that it takes you out of trying to get stuff that's not there a lot of times, trying to force risk rewards that are not there, trying to have smaller stop losses just to hit a risk reward, trying to extend the TP. That's a huge problem, and you have the potential to get wicked out, which is what this whole thing is about. But yeah, I'm gonna screenshot this real quick. TradingView updated something weird where now if you have text and then you go to the next pair, it automatically deletes the text, which is really fucking weird. I don't know why they would do that. But check that shit out. It's just okay. It was gone last time. I'm not tripping. It was gone. Whatever. But all right. So on GA, what happened this week is GA was going up. Okay. Simple trade. It was going up on the 4 hour momentum, everything. And what I did is I had a trade right here, entry right on top of the zone, TP the next level, bang, 1-2, classic. Everything I've been doing for a while, making money. And price came down and wicked me out, spread, whatever, and stopped me out. If I would have had a one-on-one, that would not have been a problem. And this is what I'm talking about, where price came down. Price went past over 40 pips, wicked down over 40 pips, and then closed, like 30-something pips in profit. That's crazy. And it stopped me out. But a one-to-one, that would not have been a problem. The same thing with with UJ. Same thing happened. I called this trade out to the chat. Okay. going to daily, whatever. Price is going up. We had this big channel. Price broke out of it. And then we had a push up, higher low, push up. Okay. Taking trades off of this. I expected it to bounce. This actual trade was like a 1-3, I think it was, and it wicked down. Even a 1-2 would have got stopped out on this one. So that's frustrating. I woke up and lost, and I was like, that's stupid. And then it literally closed, almost all the way to TP when it wicked down 43 pips. That's insane. But a 1-1 would completely negate all of that. So this is what I'm saying, where if price came down here and closed like this, you would close it out. And then you would close it out right here. And then that would be a 47 pip, whatever loss. That'd be about half. So about 55%, 60% of the total loss that you could have had. Whereas a lower risk reward, you would have lost completely. And then GA would have been around the same thing, where price came all the way down here and then closed like that. But if it did come down there and wake you out, you probably would have closed at about half of the potential thing, about 55, 60%. And in the long run, if you're able to do that 50 to 60% every single time, out of 100 trades, you're going to be profitable. It's going to end up being about a 1 to 1.5 return on every trade, a 1 to 1.5 to 1 to 2 return if it's 50 to 60%. So it's going to end up being close to double the profit with 1-to-1s that it would be, if you were just taking the full loss and everything. So that's why I'm saying I believe that I think I'm going to go back to 1-to-1s. I'm going to back test it a little bit more, update next week. But I just think it's a good thing to do. No risk reward mindset. I'm not trying to force anything that's not there. Lately, I've been doing that a lot, trying to force higher risk rewards. Whereas this, it just makes it so simplistic and easy, and I really, really like that. And in the long run, it evens out to be about the same thing. The difference is the mindset going into it and not getting stopped out on stupid shit with the higher risk rewards. But they end up being around the same thing if you're going to completely take out the emotions and the mindset and everything. But I just think this is more simplistic and duplicatable in a long-term type of thing because of the mindset and the stupid wicks out and all that shit. Because I believe that for my back testing, it looks like 10 to maybe 15% of the time stuff like this happens. And that was 2 times this week. So think about how many times it's going to happen this entire year. And on 100 trades, 10 to 15% is going to be, 10 to 15 trades. So it's 10 to 15 potential trades that could be won more than the rest. So that's it, man. I just wanted to make a video about this. That's it, bro. OFX out.